One of the big issues about producing new technologies is that its footprint is relatively big from the very beginnings when you mine it right the way through to the final production. And it's fairly carbon intensive, and it's not even considering the damage done to the environment along the way. One company that's trying to combat this and a way to cut that exposure in the long term, which is obviously going to be good for the environment and us all generally, is London and Melbourne listed Neometals. It's addressing this very issue by exploring ways that cut that footprint down. Chris Reed is the chief executive. He joins us now. Chris, it's a pleasure to be able to catch up with you. I won't say it's a new way of doing mining because I've spoken to companies that are doing this before, but clearly this is a conscious move by Neometals into an area which has a long-term benefit, I suppose, as opposed to normal mining.
Yeah, absolutely, Jimmy. My pleasure to be here. So yeah, look, we are a sustainable battery materials producer at the moment. We started life as a gold miner back in 2002. We then developed the world's second largest hard rock source of lithium production. We did a staged sell out of that. What became apparent to us is that the world needs more and more battery materials to fuel the transition to EVs. And in particular, we need to reduce the carbon footprint, because the carbon footprint of an electric vehicle is actually twice that of a normal internal combustion engine as soon as they roll off the production line. And that's primarily due to the battery, which is obviously a new addition, and in particular the battery materials, because they come from places like Australia, the Congo, Indonesia, Philippines, all the different commodities. So they have very, very high carbon supply chains.
Yeah, my understanding is that this battery recycling part of the business is by far and away the largest, but you actually have three key units, don't you? Explain more about the business model that you put together.
Yeah, sure. So we made a conscious pivot away from hard rock mining into more urban mining. One of the trends, I guess, in mining globally is that the grades are getting less, the mines are getting deeper. You have to mine more material. So the carbon footprint of a lot of these materials just goes one way. So, we looked at the other end of the supply chain and thought, well, there's a lot of material and a lot of effort that's going into making batteries. Let's develop a process to recover that. So that reduces the carbon footprint. Some of our other businesses are about recovering different battery materials from different feedstocks. We recover vanadium, which is an emerging battery material for stationary energy storage, from steel slags that are a byproduct of the steelmaking industry up in Scandinavia. Another project that we've developed, another technology that we've developed in-house with our partner Mineral Resources around electrolyzing lithium chloride to produce lithium hydroxide. Lithium is the only non-substitutable element in a lithium-ion battery. We can change every other material in the battery if there's shortages, but not lithium, because the lithium actually carries the electrons.
So you talk there about partnerships. Is this a key sort of foundation for the business itself? Do you use partnerships to get you to where you need to be?
Yeah, absolutely, because, down in Australia, we don't really have the critical mass. So, we've got a deep history in mining and processing, and we're developing solutions really for markets that are outside of Australia. So we do take a conscious decision to partner. So we add value in the test laboratory or with the drill bit. We build up that value, and then we bring in big multi-billion-dollar companies so that we can develop them at a scale that we couldn't achieve either locally or with our own balance sheet. So we proved that a number of times. And, the last mine we developed, we made almost $250 million off of a $3 million investment. So that enabled us to share about $80 million with our shareholders, invest $80 million in our other businesses, and we've still got about $80 million in cash and investments on the balance sheet, no debt.
What about the cost involved in this? Does recycling mean that your cost base is heavily reduced? How does it compare with the traditional ways of getting these materials out of the ground?
Yeah, it's an interesting point. Well, at the moment, at our commercial operation in Germany, we're actually getting paid by the car makers' supply chains to take the batteries and recycle, and we get to sell the concentrate that we produce, what's called a black mass, and get paid for the nickel and cobalt. So it's that's a pretty fantastic business. If we have a look at generally, all of our technologies, they will produce high purity battery materials for reuse in new products, with the lowest carbon footprint at the lowest quartile, if not the lowest point on the cost curve.
So you've got a big joint venture going in Germany, and I understand as well, reading through some of the literature, that you have a relationship with Mercedes-Benz. What's that about? Is that about producing batteries for electric vehicles, or there is something different about that relationship?
So I'll address the first part first. So that we do have a incorporated joint venture with a company called SMS Group. So it's a 140-year-old German plant builder, one of those hidden champions, located about 2 hours outside of Frankfurt. They've got 14,500 employees in 95 sites around the world and production facilities in Germany, the US, India, and China. When we moved into the battery recycling space, one of the key ingredients that we saw for success was actually to partner with someone who could actually build the plants, because it was going to be a very, very big problem. It was going to be a very, very big market. We couldn't see who was going to supply the capacity. So we were never worried really about the feed. It was more about how can we build the plants required for the market and our customers in the time frame that they need them. And hence we did the 50-50 joint venture with SMS. What that has enabled us to do, along with our flexible business models, is to attract Mercedes-Benz. So we were picked as a technology partner for the recycling. We entered into a cooperation agreement. We will offer them a contract or a plant so they can do a 10-ton battery recycling plant to go at Kuppenheim in Germany. We're entering into a 5-year R&D collaboration where we'll essentially test the latest and greatest cell formats. We will teach them how to recycle their batteries and look to provide an industrial solution to, one of the true brand names, or the most recognizable brand names in the car world. So our relationship with Mercedes, we're supplying them a 10-ton a day plant on a royalty-free basis as part of that collaboration. Obviously, for any industrial scale, we will go to either joint ventures or plant supply and licensing arrangements.
Let me bring up a share price chart. Look, the going is tough for pretty much every company around the world. And of course, you haven't been immune from this dropback. This is the Australia listed stock, which of course is the main stock. You do have a listing here in London, but it's not the main one. This shows a market cap of about $500 million, just over $500 million Aussie dollars. What do you say about what's happened? I mean, you're already producing revenues. You're already a company that's in production with your partners, aren't you? So this is a company that's already doing things with an end result. Where's the share price go from here? What are you doing now to ensure that there's some sort of shareholder return?
Yeah, sure. I mean, we're investing in that business every day. So, the number of catalysts for the battery recycling plant, we've got our own 10-ton a day commercial operation in Hilkenbach, Germany. That's fed by the German car makers. We're taking modules. We're creating, we're ramping that up and we're making revenues. And then we plan to scale the business up to 50-ton a day plants. And then towards the end of the decade, 500-ton per day plants. So, in the first quarter next year, we expect to offer Mercedes a plant supply agreement for the 10-ton. The first part of it in the March quarter, the second part in the June quarter. We've also got an arrangement with Steel Company of Canada to deploy our technology into North America with them. We expect to offer them a 50-ton per day plant in the June quarter. We'll put out our internal evaluations to build our own plant, a 50-ton plant in Germany, also in the June quarter. And then we start constructing the Mercedes. So for us, it's about going from 10 tons to 50 tons to 500. And because we've got a plant builder, and, that is one of the unique parts about our business, is that you can actually come to us and say, I need to recycle this over this period. And we can say, well, we can do it for you as a service, or we can do We can do it in a joint venture and share the economics, and then to deliver the customer the total lowest cost of recycling over time, we must migrate to a plant supply and royalty or technology license. And in my mind, we don't have competitors that would do that. Like the big competitors in mainland Europe, Umicore or Hydrovolt, they're planning these big plants, but they're doing that because they need the feedstock for their own operations. So Umicore's obviously the leading cathode producer outside of China. They need to recycle because for every ton of material that they can get from recycling, they don't have to go into the primary market and compete to buy that. All of the car makers are scrambling around. They don't know where they're going to get the feedstocks for their batteries to go into the cars. It's as evident, we're seeing now, car makers for the first time enter into contracts for mine products directly with the miners.
This increase in your potential here, you're talking about the producing your own plant and making sure it's as big as possible to cope with the increase in throughput. How steep is the economies of scale curve on this as you go up from 50 to 500 tons? I mean, that's a really tenfold increase. Do economies of scale, do they go up commensurately, or is
yeah, absolutely.
The bigger the plant, the bigger the plant, the better it is?
We'll get a fantastic economy of scale going from 50 tons to 500 tons a day. The technology that we've based our flow sheets on is imminently scalable. It's used in lots of mines. We've just applied the techniques to taking batteries as a feedstock instead of mine materials.
But of course, the materials have to get to where the plant is. Who pays for that? Does your client you're doing it for presumably gets it to your front door?
Absolutely. They drop it off, and as it goes over the weighbridge, we issue them with an invoice. So we are currently getting paid to take modules from the German car-making supply chains.
Okay, so where do you go from here? You've given a little bit of an insight into what your plans are and how you want to expand production and so forth. Sure. What else are you saying to investors about the outlook and where you go in 2023?
Yeah, well, we've got a fantastic pipeline of business development opportunities, one or two additional ones that are public and then a whole lot of private ones. So, we've got an MOU with Itochu to look at putting a plant into Japan. We're talking with a number of other car makers and cell makers and waste aggregators. We're talking to everyone in the business because, there's not, like, to put the European market into context, there's about 100 to 110,000 tonnes of recycling capacity in Europe as it stands today. There's only about 3,000 tonnes, which is hydromet recycling, right? So it's not smelting. And technology like this it'll be mandated that you need to use technologies like this when the European battery regulations are passed, hopefully early in the new year. In 2026, the total addressable market in Europe will be about 350,000 tonnes. And so we struggle to see who is actually going to build the capacity. We can only build a couple of plants at that stage to get into production by 2026.
How are you going to address the cost in building all these extra plants? I mean, there is a cost attributable to this. Presumably, you come back to the market or more joint ventures?
So, look, our preferred business model is joint ventures. So where someone's got the feedstocks, the feed for the plants, sites, supply chains, we bring our exclusive access to the technology. The plant will be built by, a globally recognized plant builder. We will install it, commission, be a key part of the operating team. We've designed the business to make less money per unit of throughput over time as the volumes go exponential. But our return on invested capital, we expect to go exponential too. So when we operate as principal, we get all of the products, but we have 100% of the capital cost. In a joint venture at 50-50, that obviously halves. And then when we get into plant supply and licensing, it's actually negative CapEx because we actually get paid and make profit in supplying the plant. And then we get a technology license. So we have quite a number of licenses out there, and we get a 10% gross sales royalty on those licenses. So that's obviously very, very attractive because you're not putting any capital in. and you're getting royalty payments back.
Yeah, sounds like a good business model. What keeps you up at night? Because with that sort of insurance, if you like, against all that you're doing, where are the stresses and strains? We've got an economy which is apparently, according to economists, turning down. We've got inflation.
Yeah.
We already know about. How does all this affect you? And is it a headwind, or because of the fact this new technology is something apparently we're told we need, presumably your business model is fairly well insulated, isn't it, from outside forces?
Yeah, I think it is a wonderful combination of a few factors. You've got a technology that'll operate at the bottom end of the cost curve, and 90% of our basket of goods we can hedge on the LME. So nickel, lithium, cobalt, copper, aluminium forms about 90% of the value of our basket of goods. So in times of high inflation, the price of commodities on real terms stays generally pretty flat. That's most technologies in an inflationary time, you have to cut your prices if you're offering subscriptions or whatever. So that is unique about the battery recycling. But, we're not immune to capital cost increases, operating cost increases. Our operation in Germany, what we've had to do there is our plant if we scale up the plant in Germany, we've designed that not to need gas and to run all electric. Fortunately, our first 50-ton plant will be going into Canada, where we've got access to Henry Hub gas prices and very, very cheap hydroelectric power. And so that alleviates some of the pressures as we scale up from 10 to 50 tons.
All goes to help reduce that carbon footprint, which we're all so careful about these days.
And look, the feedstocks grow every day, right? So every day they're making cells, there's scrap. And we assume about a 10% scrap rate. But it took Panasonic 5 years to get the Tesla Gigafactory down below 20%. So none of the cell makers have really had any experience of producing batteries in these volumes. The car makers will no doubt have recalls either because of the batteries or other stuff. The transition to EVs is immutable primarily because of the cost to run. An electric car, it costs about 10% of what an internal combustion engine car costs. Yes, there's a difference in sticker price. Yes, the subsidies from various governments help. But as the percentage of EVs and the overall fleet increases, those prices will reach parity. You've seen a lot of the various jurisdictions around the world give timelines on when internal combustion engines have to be phased out by. So, every day they produce batteries is production scrap. Every battery that gets into a car is going to come back in 10 or 12 years' time and need recycling. So we've got a fantastic runway ahead of us. To put the size of the pie in Europe, at the end of 2030, there will be about 600 billion euros worth of recoverable material in cells in Europe. To put that into gold equivalent, that's 300 million ounces of gold. And each ton of those batteries is the equivalent of 4 to 5 ounces of gold in value. So it is a fantastic prize.
We look forward to speaking to you again in 2023. But in the meantime, Chris, we'll have to leave it there. But thanks indeed for joining us from Neometals.
Thank you very much, Jerry. You have a great day and have a Merry Christmas.
You too. Thanks so much indeed. Here's to 2023. That's Chris Reed. He's the Chief Executive of Neometals.